When it comes to passing wealth to your loved ones, understanding transfer taxes is crucial. Today, I'll be talking about the three important types that you need to know: estate tax, gift tax, and generation skipping tax. And no, they're not the same. I'm Shann Chaudhry, and don't worry, I'll make it simple for you. So let's start with estate tax. Think of this as the government's share when you pass away and you leave assets to your heirs. Key points about estate tax. First of all, it applies to your entire estate's value above the exemption amount. For 2025, the exemption amount is $13.99 million per individual. So for a married couple, it's almost $28 million. The tax rate can go up to 40% on amounts above the exemption amount that transfers to the next generation. However, transfers to your spouse are generally tax-free. Gift tax is a little bit different. Now, you might think, well, what if I just give everything away while I'm alive? Well, that's where gift tax comes in. The things that you need to know about gift tax is that there's an annual exclusion. That lets you give up to $19,000 per person in 2025. That's to as many people as you'd like. Gifts above this amount count against your lifetime exemption, and the lifetime exemption is shared with your estate tax exemption. Medical and educational payments are made directly to providers, generally are tax-free. Now, to make things a little bit more complicated, generation skipping tax. Generation skipping tax is when you try to pass assets to more than a generation directly below you. So this typically applies when you transfer assets to your grandchildren or to two or more generations younger than you. And it's an additional tax on top of estate or gift tax that shares the same $13.99 million exemption amount per person. This prevents avoiding estate tax by skipping generations. It also applies to unrelated people more than 37 and a half years younger than you, which is sort of a random age, but actuarially it's a generation. So how do they work together? Well, these three different types of taxes work as a unified system to ensure fair taxation of wealth and transfers to the next generations. So, for example, imagine leaving $15 million to your grandchild. First, it's subject to estate tax on the amount above the exemption, above that $13.99 million. So it's about $1.01 million. Then generation skipping tax applies to the same transfer. So potentially there's two layers of taxation on that gift. So in conclusion, you have to understand that the taxes are not the same. Gift tax, estate tax, generation skipping tax. You can actually have taxes apply to one gift made to the next generation, or assets that you're passing down can be subject to both estate and generation skipping tax depending on who they go to. If you have any questions about estate tax, your exemption amount, what you need to worry about, please feel free to reach out to us and contact us at smcesq.com or 210-646-9400. Again, I'm Shann Chaudhry. Have a great day.